What is the one cost that you may not be considering when purchasing a home? I'm Jamie Mushaw with Jamie Mushaw Real Estate, and if you're new to our channel, we cover all things Portland metro area and Southwest Washington, which includes Vancouver, Camas, Battleground, and other surrounding cities. We also cover topics that are relevant in today's real estate market. Well, the one thing that you may not be considering when purchasing a home at the top of your mind is homeowners insurance. And today we're going to talk about homeowners insurance and how it has been on a drastic rise over the last 6 years and how that may affect you when you're looking at purchasing a home. Obviously, when you're purchasing a home, one of the very first things you're considering is affordability. Affordability to most people is, what is my payment going to look like when I'm purchasing a home? Usually the top two things that home buyers are looking at is the cost of the home in terms of purchase price and what is my interest rate going to be. Most home buyers will also look at what maybe their yearly taxes are going to be included into their payment. And then homeowners insurance is typically the last thing that is on their mind when they're looking at purchasing a home. But with the recent rise of homeowners insurance over the last 6 years, it is something that really needs to be considered at the top of your mind when you're starting to purchase a house beyond whatever the purchase price is and what the current interest rate will be. Because homeowners insurance is going to be a key factor in what your payment is going to be on a monthly basis. So the one thing I wanted to share with you today is recent information that was released about the top 10 homeowners insurance companies in the US and how their rates have increased over the last 6 years. So in this graph, you can see that there's the top 10 insurance companies in the US providing homeowners insurance. And you can see how they've increased over the last 6 years, with Progressive at the highest increase of 87.8%. That's almost 100% increase in the last 6 years alone. Now you can also see that State Farm, which is obviously one of the largest insurers for homeowners in the US as well, has only increased to 24.1%. Now there's some speculation behind that as to why that is, because one reason is that they're moving out of California and Florida, which have some of the highest natural disaster rates in the US. And so part of the reasoning that they may not be raising their rates as high is because they're not paying out those premiums in those states. Therefore, their cost that they're paying out is lower than some of these other companies that are in those states. Additionally, some of these costs can be going up because of inflation in the US. Obviously, after COVID happened, the cost of replacement on, anything that's within a home, if you have a fire, if you have to have a roof replaced or anything along those lines, the cost of replacement for those materials and labor have gone up significantly. So I don't know that we're going to see a decline in any of that pricing based on that unless inflation comes down drastically. Now, as I mentioned before, a lot of home buyers, when they're first starting to look, the first thing that they're looking at is what is the price of the house that they're going to purchase and what is the interest rate attached to that house in terms of whatever they're going to be having as a down payment, and then what is that payment going to look like to you on a monthly basis. Insurance is typically one of the last things that you think about when you're looking to purchase a home. So now with insurance rates increasing drastically, this is going to have to be one of the first things that you consider when you're looking at buying a home, because that insurance rate is ultimately going to affect what your monthly payment may look like. And if the rates are significantly higher than you had anticipated, then that means your monthly payment is also going to be higher, which then can put you out of the affordability range of a particular house that you may want to purchase. In some areas, you're not even seeing companies that are willing to write policies for particular homes just because of the area that they're located in. Like I mentioned before, you're seeing companies move out of California and Florida because of their high natural disaster rate. When you have less companies to choose from in those particular regions, you either don't have choices for insurance or your premiums are going to be significantly higher because you have less companies to choose from. It's basically a supply and demand when you're looking at homeowners insurance policies in those particular areas. So the one thing I wanted to do was provide you with some potential projections from that previous graph as to how homeowners insurance may look in the next 3 years. You can see in this graph that Farmers is going to have the highest increase over the next 3 years, with the USAA being at the low end and State Farm still being hovering in the middle there somewhere. Again, these are just projections, but based on the information on that previous graph, this might be a good indication with these particular insurance companies what you can expect over the next 3 years. Rising insurance rates don't only affect home buyers that are trying to purchase homes, but they also affect people that currently own homes. You could have homeowners that could very easily afford properties when they originally purchased them and not expecting insurance rates to increase at the rate that they have been over the last 6 years. And now those payments could start coming unaffordable for them and put stress on their monthly budget. And part of that stress that you'll see is that because your monthly payment is going up, you're going to see your escrow account require higher amounts on a monthly basis, because otherwise you'll be coming up short when it's time to pay those insurance premiums. So essentially every single month you're having to pay out more and more because your homeowner's insurance is increasing so much. Also, some homeowners might be forced to shop for more affordable homeowner's insurance, which could ultimately decrease the amount of protection that they have on their home because they can no longer afford that monthly payment because of these homeowner's insurance rates increasing so much on a yearly basis. So the increase of homeowner's insurance does not only affect home buyers and current homeowners, it also affects people trying to sell their home. And the reason behind this is that people that are trying to sell their home, obviously those home buyers have to be able to afford the insurance that they're getting on the property that they're purchasing. If buyers cannot afford insurance on that property that they're looking at purchasing, one of the things that they may do is reduce the budget of the type of home that they're looking to purchase, or they may look in other areas or regions where the affordability is easier for them to be able to pay on a monthly basis. Because there's already stress on buyers in this market with high interest rates and high sales prices, homeowners that are trying to sell their properties may have to start giving more concessions to buyers so they can afford to purchase their home in terms of closing costs or rate buy downs. Another thing that may happen ultimately is that prices are going to have to start coming down in order for buyers to be able to purchase properties with these rising homeowners insurance rates. One of the other key factors in this whole thing is that if a homeowner can no longer afford to pay their monthly mortgage, they could be forced to put their property on the market. And when those properties start coming on the market, then you start seeing inventory increase, which ultimately is going to drive prices down anyway because of that inventory increase. Because homeowners are not going to be able to afford the insurance. They're not going to be able to afford high prices, and they're not going to be able to afford the interest rates, especially if those rates do not come down anytime soon in the near future. So based on these trends, insurance rates are obviously not going to come down, and the likelihood is that they're going to increase year over year from here on out. And some insurance companies are going to raise their rates significantly in high-risk areas, or just keep pulling out altogether from those areas, which leads to buyers basically saying, I'm not going to purchase a home in an area that's high risk that I cannot get insurance coverage in, or the insurance is going to be so high that I can't even afford to purchase that property. Some states may introduce new regulations or relief programs to try to help these homeowners get into these properties where they are high risk areas, or maybe the rates for particular areas are going to be significantly higher. That's something that we're going to have to wait and see if it happens or not. So if you're a home buyer and you're looking to purchase a home in this market, here are some tips that could possibly save some money for you and time when you're considering writing an offer on a house. Before you even have an offer accepted on a house, you might want to talk to an insurance agent just to get you an approximate quote for a particular home that you're interested in. One of the other things that you'll want to consider is working with a real estate agent that has firsthand knowledge of what insurance trends are in particular areas. You might want to consider a home that's in a lower risk area so you're not paying those higher premiums. Lastly, the one thing I would highly recommend is include some type of contingency in your offer that says, within X amount of days, we're going to get an insurance quote on this home to make sure that we can afford it. And if for any reason that quote seems like it's going to be substantially higher than you had anticipated, it gives you one additional step to be able to back out of that offer and retain your earnest money. Here are some tips for current homeowners to keep your payments manageable if you're seeing that your homeowner's insurance premiums are going up. Shop around insurance companies and maybe consider bundling your insurance with your automobile insurance, because usually insurance companies will give you discounts if you're doing bundlings within your insurance packages. You might want to consider increasing your deductibles if something happens on your home. That way it would decrease your monthly premiums. One of the other options you might want to consider doing is improving safety features on your home, such as storm-proofing your home, security systems, sprinkler systems inside your home to reduce fire loss. These are all types of things that may bring your yearly insurance premiums down while also improving the value on your home. Lastly, you might want to consider a yearly review of your homeowner's insurance with your insurance agent. That way, this ensures that you're not paying for unnecessary costs, and it might bring your premiums down on a yearly basis. So that concludes my video on the continual rise of homeowners insurance in the US. Down in my comments below, I have a link to my weekly newsletter. I would love for you to sign up for that. We have a lot of great videos coming here in 2025, and I don't want you to miss out on those. So please like, subscribe, and comment below, and we will see you on the next one.